This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Starting a new week this Monday morning, we are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Surabhi is with us as well. Guys, hi, morning.
Good morning.
Hi, good morning. It's the start of a brand new week and looks like the bulls are, tightening their grip a bit on the market, although it's been really range-bound last week. Let's see how things progress today.
They got battered quite badly on Friday. I'm hoping with all the green on global screens, they'll want to make some sort of a comeback today, Prashant.
You know, somebody on Twitter, I don't recall what the handle was. So that is last time when Jackson Hole happened, after the Jackson Hole market rallied, and you said, I don't remember. You said I said. The gentleman pointed out that you said Jackson Hole up bull. So what are you going to say now?
I guess that sounds enough today.
Somebody's, but I mean, it's.
Maybe it was off camera.
I don't know. I mean, but
It sums it up. Whatever it is, Prashant, just say it. They say it's you.
I said it. All right, let's just quickly tell you what you need to know. Basically, Friday was bad, but this morning it's not that bad. Take a look at what we did on Friday on the Nifty. We made a new low, right? So the low, which is 19,253, the low the week before, that was broken. And we kind of ended, we were below that particular level. We broke intraday and then kind of ended around that. Now, global cues, right? So this is a Friday session and that's got some bearing. But the point is global cues have turned around. They're looking up a little bit. So they're positive. The NASDAQ, for example, ended about 0.9% or so. And the reason is that the Jackson Hole Symposium, over Friday, then over the weekend as well, because it was running through to Sunday, did not throw up any fireworks. There were no great surprises coming out of there. So if you focus on the one big speech, the address, which is Fed Chair Powell's address on Friday, well, he said hawkish things, he said dovish things. On the whole, it was quite neutral. I mean, there wasn't very much for the market to take away in terms of to change its mind or reprice what they think the Fed will do, etc., etc. So in that sense, it was quite neutral. It's not moved market pricing in any significant way at all. So, you had the 10-year, which is still trading at about 4.2%. So it's neutral, right? I mean, it's not as if it is dovish, so yields climb down or anything. It's still there, unchanged. The 10-year on Friday was unchanged at 4.2%. The dollar index is still slightly, just a tad above the 104 odd levels. So that's the US, right? So not really very big or meaningful cues out of what happened, but nothing negative as well, nothing hawkish as well. China Sunday actually, yesterday, cut stamp duty on stock trades for the first time since 2008. And I believe the Chinese stock markets are rallying. And why not? I mean, the last time China cut the stamp duty in 2008, the next day, the Chinese index, the CSI 300 rallied almost a full 10%, one day. And I think I believe Chinese stocks are up 5% now. It's basically, the government at the margin trying to boost stocks, lift sentiment, etc. And this comes after, some help that the government announced on the mortgage side, which was last Friday. So keep an eye out on this one because, when we talk about flows, etc., that's the most kind of relevant market that you kind of compete with. Now, the setup on the Nifty, in terms of levels, etc., doesn't change very much. The averages have changed. The resistance on the Nifty is still at the 20-day moving average, which is 19,490. And I would say we're not very far away, but I would still look for the Nifty to stabilize around this 19,200 kind of level. Intraday, we got very close to those numbers. There's a falling kind of support line, 3rd of August, 14th of August, and then 18th of August as well. And I think we kind of almost did not touch that line, downward sort of falling line, the support line, but almost we got to that and then bounced. That's why I'm saying around 19,200, I would kind of look for supports on the Nifty. Now, while the Nifty broke the low on Friday, the Bank Nifty did not. And we've been pointing this out that the Bank Nifty perhaps has been the stronger of the two indices for the last 3 or 4 trading sessions now. So Bank Nifty closed in the red on Friday, but it did on a week-on-week basis manage a positive weekly close. Support for the Nifty Bank does not change. That stands around 43,600 because that's not been broken. That's still valid. On the way up, the 20-day moving average for the Bank Nifty stands at 44,575. For the last 3 or 4 days, actually almost all of last week, the advice has been to kind of stay clear, stand away, and see what the market wants to do. Now with Jackson Hole, etc., behind us, perhaps, I mean, I think one should feel a little more confident to kind of enter the market, take trades, etc. But best done if you do get a slight dip closer to 19,200 on the Nifty. And maybe a little lower on the Nifty Bank as well. That will put you in a sort of decent kind of position instead of trying to chase the open, because on the upside, I mean, there is still no reason, at least in the very near term, for the market to start to run away or anything. So the best kind of strategy would be to look for dips intraday, etc., and try to get in with those kind of levels on both the Nifty and the Bank Nifty in mind. Sonia.
Absolutely. And the thing is that the Nifty is still down about, 3.5% from its recent highs, right? Yeah. So there's a lot of ground to cover. I think give and take everything, the market has been very, very range bound. I agree that there are very strong global cues this morning. The Dow is up about 250 odd points, was up to 50 points on Friday. So in that context, the global cues are strong, but our own markets have been so range bound between 19,200 and 19,500. Every time we get to the lower end of the range, there's buying, and every time we get to the higher end of the range, there's selling. So in that context, now, the buying action perhaps could emerge, as Prashant was also pointing out. But there are a couple of levels to keep in mind. On the upside, though, the resistance still stands firm at the 50-day moving average and the 100-day moving average, around 19,400 or so, the levels on your screen. The big problem really is the Bank Nifty, right? So while the Nifty is down 3.5% from recent highs, the Bank Nifty is down almost 5% from recent highs and is down about 3% in just the last 1 month. So that is the index which continues to be unable to provide support to the market. Until there is no recovery in the Bank Nifty, the trend perhaps in that pocket will continue to be a sell-on rally. The other thing I want to watch out for is the domestic economy-facing stocks. So if you just map out what's happened in the month of August so far, Hero MotoCorp, SBI, Britannia, HDFC Bank, all the stocks that have a domestic economy-facing tilt are down and out. So is the consumption pattern slowing? That seems to be the narrative that's picking up as well. So just keep an eye out on that. Apart from that, of course, a lot of cues that we'll talk about in greater detail. But just to look at what's been happening with the global setup, the bulls have taken a back seat. I mean, just look at the kind of losses that we've seen in the month so far. So it looks like it's going to take some time for them to sort of climb back.
Yeah, absolutely. And I guess, Sonia, that's a question at least I'm asking myself, that the equity market perhaps preempted some of the hawkishness that we saw from the Fed chair, right? Because the US markets are down anywhere between 3% to 5%, depending on which index you're looking at. The Nasdaq's, by the way, fallen the most in the month of August. So you can argue that equities kind of have been pricing in this new reality of, sticky inflation and maybe one more rate hike. So that's the picture across Wall Street over the month of August. The issue is dollar and yields, because despite the equity rally on Friday, the DXY continues to be above 104. Let's pull up the dollar index. Yeah, it's there on our screens right now, 104.11. Cooled off a little bit from the Friday highs, but it's still, at the highest level since the 1st of June. Yields, they've actually cooled off very significantly just now. It's 4.23 once again. It was about 4.25 when I checked a couple of hours ago. But the issue is that yields are still elevated. Yields didn't collapse in a hurry or rejoice in a hurry after that Jackson Hole meet. So we need to see if, indeed, this is entirely priced in. The fact that maybe there'll be just one more rate hike and then the Fed is done. That's still a bit of a question. Just to come to our markets, Sonia's already been pointing out the levels. So we did close below the 50 DMA. So the idea is probably we'll see some sort of a attempt of a pullback today. The only problem is the huge amount of open interest buildup that's happening at 19,300, 19,400, 19,500. That's where the call writing is very, very aggressive. In fact, the outstanding open interest there is in excess of 1 crore on all these three strikes, 19,300, 19,400 and 19,500. So they will be acting as a bit of a resistance. The key events. Now, just to point out, today, of course, we'll spend a lot of time talking about the Reliance AGM. The stock has underperformed. It's been very, very range-bound, done about 2.5% in August so far. But the market has great expectations. It's looking out for more clarity on what happens with Jio Financial Services, what's the roadmap after the BlackRock announcement on the mutual fund side, and also more clues on Reliance Retail. We know about the constant sort of fundraise, the top dollar valuations that part of the business is getting. But what about value unlocking? Will we get something more on the roadmap, potential listing timelines? That will definitely get the market very, very excited. Also, watch out for the fact that tomorrow is another important market event, because the Supreme Court takes up the Adani Hindenburg matter once again tomorrow. Remember, late Friday, SEBI submitted its report before the Apex Court. The Apex Court will be hearing that matter come tomorrow. So that'll also sort of weigh on the market's mind. Finally, for today, let's not forget that rice stocks are going to be in focus because the government, I mean, we saw it with onions. Now it's happening with rice. I think when we went to the weekend, was parboiled rice was the talk. Now the talk is basmati exports. Not a complete blanket ban. There's a threshold they've announced, but I think rice stocks kind of give an indication of the government's thinking as well. They really want to clamp down on inflation.
You know, on Reliance, right, BofA Securities put out a very interesting note where they said generally an AGM is not the place to announce any timelines for IPOs. It never happens, so don't have those high expectations this time around. But yes, of course, any talk on, what's happening with the energy business, deleveraging, any other potential collaborations, etc. But don't keep your hopes high, is what a lot of the brokerages believe.
Well, that's the secret of surprise and happiness, right? Expectations.
Life in general.
All right, well, let's just, that's the clock which is ticking down to the AGM speech, which is at 2 o'clock. Well, let's quickly, before we go any further, tell you what's lined up in the first half hour of the show today. We will get you updates from markets across the globe. Ed Yardeni of Yardeni Research will join in to discuss the global setup. Our research team, after that, will get you CNBC-TV18 list of top 10 stocks for the day. And at 8:30, we will have Prakash Diwan joining in to talk about all of the news flow which has been coming through from over the weekend, and of course things that he would like to bet on from here.
Okay, well, the implied opening for now is up about 50-odd points. So it looks like we're headed to a good start. We'll take it from there. On the equities front, first up, Pramod Amte of InCred says that Q1 FY24 has started with strong order inflows for the capital goods sector. States capex uptake and home loan growth reiterate their investment theme of housing and capex infrastructure sectors. He adds festive season-led recovery, aided by easing interest rates in the second half, will be the key drivers to watch out for. Considering the sharp run-up in mid-caps, they've removed KEC International and Kajaria Ceramics from the high-conviction stock idea list and introduced KEI Industries and Thermax. They've also downgraded Astral, Crompton Greaves, Cummins, Century Plyboard, HDFC AMC, HUL, Marico, Persistent Systems, SBI Life and Sun Pharma. That's a long list of downgrades there.
All right, well, we'll talk more about that, but let's get you some money market views as well. On the rupee, we have B. Prasanna of ICICI Bank, who says dollar continued to remain stronger as probability of another rate hike increased after Fed Chair Powell's marginally hawkish message at the Jackson Hole Symposium. However, rupee remained resilient, helped by RBI's intervention and inflows in equity market. Further, the People's Bank of China's aggressive fixings and interventions help Chinese yuan to stabilize, helping Asian currencies. He expects rupee to trade between 82.2 to 82.9 this week.
And on the bonds, B. Prasanna of ICICI Bank says global markets remained in consolidation phase as the incoming data was largely in line with expectations. Back home, the MPC minutes were released, which clearly demonstrated members' intent to look through recent vegetables-led inflation. He expects a gradual downtick in yields with an improvement in systemic liquidity and the benchmark 10-year yield to trade in a range of 7.1 to 7.20%.
Okay, plenty of stock-specific action to track as well today. We'll get to it in just a bit in our top 10 segment. Today we're looking at Linde India, BEML, Bharat Electronics, BHEL, Industar Capital, Indian Bank, Jio Financial Services and Amber Enterprises on the back of positive news flow. Paytm and NBFC stocks could perhaps open in the red. We'll tell you why in just a bit.
Okay, Ed Yardeni is joining us now, President at Yardeni Research. Ed, good to have you with us here. Good morning. Thanks very much for your time. So let's just start with the Jackson Hole Symposium and Powell's speech. What did he make of it? What's the message, and will market pricing change over the coming few days?
Well, I think that the speech was quite hawkish. It was all about inflation, and it was certainly an indication that the Fed is committed to bringing inflation down to 2%. As a matter of fact, Fed Chair Powell said, forget about 3%. There's some chatter out there that maybe the inflation target should be higher, and he kind of shot that down. 2% is our inflation target. That's where we want to get it down to. It was hawkish because he really focused on either keeping interest rates at the current levels if things continue to moderate and go in the right direction, or else actually raising them if, in fact, inflation does get stuck here or if it goes higher. He didn't really talk much about under what circumstances the Fed would lower interest rates. But I think it's pretty clear that if inflation continues to moderate, there's a good chance the Fed will be lowering interest rates next year.
If inflation continues to moderate, right, that is, I think, the key point to focus on. But what do you do at a time like this in emerging markets like India? Because now there is this big fascination towards emerging markets, especially this year. Do you think a lot of that has played out already? Or is there more to go?
Well, I think there's probably more to go. I would say that global investors are probably becoming a lot more discriminating. They're not just buying emerging market funds, no matter how they're weighted. I think they're becoming more discerning about which countries they actually want to be in. And I think we've discussed this before. One of the countries that is no longer viewed as favorably as in the past is China. China's economy is definitely struggling, as we've seen recently. The Chinese government has been lowering interest rates. They've been trying to ease conditions in the property market. But a lot of their growth over the past few years has been a result of the property boom, which has now turned into a bust. And the reason for that is way too much debt, too much capacity, too much expansion. And now as a result of that, real estate prices are weak over there, and investors are no longer plowing money into the property market. And that in turn is affecting the provincial governments because they sold land in order to raise revenues. So I think China's got some economic issues that benefit countries like India, Brazil as alternatives to as countries that are probably going to do pretty well as emerging market havens for global investors.
Okay, Mr. Yardney, yeah, absolutely. I mean, China is resorting to all kinds of measures, including stamp duty cuts, just anything to prop up the stock market at this point, right? Let's see how successful that is.
Well, it's not working.
Yes, so absolutely. Take your point. Yeah, they've been trying everything on the property side and, short-term measures to prop up the equity markets. The question is, how do you see flows shape up for a market like India, where at the headline level, there seems to be a lot of positive talk? In the near term, we've seen in the month of August, foreign flows have petered out a little bit compared to the deluge that we were getting in April, May and June. We have the G20 summit coming up in New Delhi. Lots of excitement ahead of that, I can tell you. So, what do you see? Let's say over the next 12 months, do you see India continuing to attract flows, even if, say, bond yields remain as elevated as they are? And are you expecting that to play out?
Well, I think right now, look, you should continue to benefit from global flows. But I just compared India and China. I think it's also important to recognize that whatever happens in the United States matters a great deal to emerging market economies. And the dollar's held up fairly well here. Usually it's a weaker dollar that benefits emerging market countries. The price of oil is held up, but other commodity prices have been relatively weak, which is, again, a negative for emerging market economies. Not for India, because India is not a commodity exporter, generally speaking, the way Brazil is, for example. But I think much will depend on the global economic environment. It looks as though China's going to be weak, Europe's going to be weak, but the United States is doing very well. And that may provide enough global growth to benefit other emerging economies like India.
All right, we leave it at that. Ed, thanks a lot for joining us. Always great to hear that emerging economies like India will benefit, whatever it takes, right? 2023 has been a good year so far for India. Let's slip into a quick break. On the other side of the break, our entire team will be joining in to help us with a list of top 10 stocks. Keep it with CNBC-TV18. Welcome back to Bazaar Morning Call. Well, this morning, the gift nifty should be up for you. It's suggesting a positive start, but that's been the general case, right? The market has sort of sees a little bit of an up move and then it becomes sort of a sell-on rally market. But let's see how it goes. The global cues have been good today, good overnight, and Reliance AGM is also later today, so we have a big queue coming up. But let's get to individual stocks that we're discussing this morning. All the NBFCs will be in focus. Ritu is joining in to give us the latest on that. Ritu, good morning.
Good morning, Sonia. You know, we've heard from some of the largest NBFCs in the system, whether it is Bajaj Finance or Piramal Capital in our banking symposium earlier, that the high spurt in unsecured retail lending is worrying. And it's not gone unnoticed by the regulator either, because we've been given to understand from our sources that in the Friday meeting with NBFCs at the RBI headquarters, this was one of the issues that was highlighted by the regulator, the high growth that we've seen in unsecured lending compared to some of the other segments. And the regulator really wanted to warn NBFCs to remain vigilant on the sector and understand where exactly is the demand coming from and whether a lot of it is also fintech-led and therefore tighter vigilance is warranted on that end. Remember, it already forms about 16% of overall retail lending by NBFCs. And as per some reports, it's expected to be almost 18% by next year. So there's been a sharp spurt, especially post-COVID. And the regulator's message has been very clear, especially in these good times, remain vigilant and provide prudently.
All right. Thanks very much, Ritu, for that. I mean, we actually we did a discussion on Friday morning on this particular segment, the unsecured segment. We put out a piece on Friday closing bell as well. So we continue to highlight that. And the RBI, of course, is taking, asking the questions. That was a scheduled regular meeting, but came up in that with institutions. Well, let's talk about stocks with news flow. Surabhi is here with details on what's on our list. Surabhi, morning.
Good morning. So first on my list is Linde. The company has received a letter of acceptance by SAIL for installation of cryogenic oxygen plant. Now this contract will be over a span of 20 years. BEML, the company has received a contract for an export order from Russia worth $20 million. This contract is to be executed in different phases starting from this month. BEL, the company has received a new defense and non-defense orders worth 30-90 odd crores in the month of July and August. BHEL, the company has received an order from NHPC worth 20-42 crores. The order is to be executed over 75 months. Indostar, the company has sold its corporate portfolio worth 915 crores to Phoenix ARC. Now, Phoenix ARC will set up a trust that will monitor progress of its real estate projects. And lastly, Indian Bank, there is a board meet on 30th of August for approval of raising equity of up to 4,000 crores.
Okay, got that, Surabhi. Thank you very much for those stocks. We'll watch out for all of them. The list is not over yet. Vivek has a couple more names on his radar. Vivek, morning.
Well, good morning. Quite a few block deals that happened in Friday's session. First on our list is Jio Financial Services. Motilal Oswal Mutual Fund picked up a large chunk of shares over here, almost 3.72 shares at 202.8 rupees a share. The next stock on our radar is Amber Enterprises. You saw a large block deal happen over there. Ascent Investment Holding, the private equity company that held almost 9.76% stake in the company at the end of the June quarter, paired close to 3.7% stake. Interestingly, this particular block deal was done at no discount to Thursday's close, and Government of Singapore picked up almost 2.2% stake out of the total equity on offer. Lastly, keep an eye out for Paytm as well. Antfin Holdings sold 2.27 crore shares at 895 rupees a share. They sold 3.6 out of the total 23.7% stake held in the company. So large amount of equity still held by this particular seller. But bunch of buyers over here, Society General, Morgan Stanley, Citigroup, as well as Goldman Sachs were amongst the key buyers in this particular block deal.
All right, thanks a lot for that. Well, let's do a quick recap of our top stocks with positive news flow this morning. There's Linde India, BEML, Bharat Electronics, BHEL, Indostar Capital, Indian Bank, Jio Financial Services and Amber Enterprises. While stocks with negative news flow, there's Paytm and the NBFC stocks, of course. So we'll come to that in greater detail. But there are some brokerages that we can focus on today for sure. Mangalam is joining in to give us the latest on that. Mangalam, morning.
Good morning. So I have a couple of stocks which have been a buzz for the last few trading sessions. and that is HAL as well as BEL. And Morgan Stanley has written on both these counters. For HAL, Hindustan Aeronautics, that is, they have an overweight rating. They've increased their target to 43.65 rupees per share. And the reason why they believe so is because they see the Indian aerospace industry having a long runway for growth. The company's products continue to get traction to replace foreign fleet. In fact, value addition locally is likely to increase after the MOU that they've signed with GE on the engine side itself. And export orders could also drive the stock closer to their bull case itself. The other one is BEL, and that's because, they have an overweight rating with a target of 154 rupees per share. The reason why they do that is because the company's won nearly 3,300 crore worth new orders in July and August. And this is in addition to the 8,100 crore worth rough orders that they had won in the first quarter itself. So what this does is takes their entire order inflow of this year so far to 57% of their total year's target. So there is a chance that it may actually exceed their company's target itself, and as a result of which there is a positive case.
Okay, got that. Mangalam, thank you very much. Let's also round up all the commodity market action. Manisha Gupta is joining in for that. Manisha, good morning.
Morning, Zirbi. Thank you so much for that. I'll start with the crude oil prices, where we have seen the WTI regain above $80 a barrel. This is after diesel prices also gained up by 5% overnight to a near 7-month highs. Well, a couple of factors which are supportive. One, there is a fire breakout in a refinery in Louisiana. The markets also have seen the U.S. energy firm cut the active rigs for a 9th straight month. There also is an interesting report from Morgan Stanley which says that the Brent prices will see support of $80 for the rest of this year because of a likely deficit that they're anticipating. And then the street is also looking on strong Chinese measures, with China halving the stamp duty on stock trading effective today. We have seen not just the Chinese market, but the Chinese yuan, and many of these commodities, since China is the major consumer and producer, also gain up. So apart from crude prices, the metals also have started the day on a positive note.
Manisha, thank you very much for that. So that's basically what the commodity picture setup looks like. We'll take a very quick commercial break here. Prakash Devan will be with us with a quick check on the market fundamentals, specific stocks and focus. Lots to discuss with Prakash coming up on the other side.
Welcome back. Lots of green across Asian screens, and China is actually leading it with that semi-stock market stimulus that's come in with the cut in the stamp duty. Hong Kong markets are roaring away about 2% higher. Taiwan's up and about as well. For us, the implied open is still, we're looking at the gift nifty around 35 points, 36 points up now, and the implied open around 50 points higher. So should be a start on the positive side. The question is, where do we go from there? Prakash Diwan is our first guest on the show today to talk domestic market fundamentals. Prakash, good morning. Thanks for joining in. So you tell us, it's been an interesting market where the bulls are really trying to defend the lows. But the problem is leadership. Banks, there is no sustained pullback. Reliance is a different story. Would you look at putting any fresh money to work right now? And if yes, tell us the one or two stocks on the Nifty to begin with, where you think the buyers can look.
Good morning, Survi. So you're absolutely right. I think the market's kind of trying to find its feet in either direction. To be honest, it's not that we've had any kind of a decisive move even on the downside, while we've kind of eroded over a period of a couple of weeks. But my sense is, this typically happens when you have a little bit of a sector churn that's imminent in the market. We've seen leadership move out of the banks, and it's not been handed over to either pharma or FMCG or cap goods. And these are sectors that don't have much of a weightage to move the Nifty, to be honest. So probably today's event, which is on the cards from the Reliance table, the AGM will probably give some sort of a semblance of a direction to the stock. That's for sure. And the other areas that I think are looking a bit promising, which people probably haven't yet allocated significant amount of money, is mining. So if you look at Coal India, if you look at an NMDC, the kind of progress that the steel unit has made, I think there is enough value that's being realized out there. So if I had to pick a couple of stocks, and these are not stocks that we talk about very often, it would be a Coal India, given the fact that the peak power consumption, that demand that we had, even in the non-summer month of June, is very clearly an indication that we will need dependence on coal imports is going to be very high. The government will keep on pushing for that. And Coal India, the way they're ramping up their business operation, I think it's going to be very, very strong going forward. So there's enough visibility. And of course, on the NMDC side, there's specific triggers to the business. But even there, I think there's a lot of potential for re-rating, given how things have panned out far, far differently than what we had anticipated from the steel side.
Okay. So on Reliance, right, because that's the upcoming event at 2 p.m. there's the AGM. Prakash, are you expecting anything at all? Realistically, an AGM has never really been a trigger for the stock, right? So do you think it would just be motherhood statements about the business, talking about several verticals, or is there anything that's stock moving that you're expecting this time around?
Good morning, Sonia. So that's an interesting point. AGMs are probably not always necessarily the best platform to anticipate any kind of, very pointed, directionally pointed moves. But, the stage at which the company is, Sonia, you have a lot of vectors that will start getting to be crystallized, whether it's, on the retail side in terms of, after this recent investment that's come in from Qatar. There's very clear indication of what is changing to move the valuation to almost like double of what the last round attracted. Secondly, if you look at telecom, there's this whole growth in the 5G rollouts, but then there are lots of specific moves within that 5G spectrum which will make a lot of sense, a lot of business sense for stakeholders to kind of understand. And of course, I think the largest area of announcements could come in from the green energy space, because that's something where maximum amount of new capital is going to be deployed. So that directionally also defines timelines. So, that's what probably the AGM could do. I mean, if you have even motherhood statements related to, change in the quantum of business, some of these businesses, it will start helping us pencil in much more than what we thought. And don't forget JFS. I mean, that's the latest baby from the stable that's got listed, and there's enough directional input that you could get. Of course, it's too early to announce victory in that space for the company. It's still too new, but at least it'll give you, as I said earlier, timelines for what to anticipate from those businesses. So yeah, from that perspective, it could help restore a lot of confidence in the stock, if not necessarily make people come and rush and buy it.
Prakash, maybe the first stock I put to you should not be this one, but what the heck? Vodafone Idea saw a big spike, 10% on Friday. Any thoughts? A huge volume surge as well. Stocks back to close to about 9 rupees or so.
Prashant, so this happens every time, Vodafone has this whole thing of getting pushed to the brink and then it makes this comeback. But this time around, it seems like, their participation, the intent to participate and continue their position as a respectable third player in that telecom space could possibly make it much more long-lasting. Of course, survival will always remain a challenge. And, the market was also responding positively to the fact that they lost less subscribers than anticipated. So nobody is expecting them not to lose subscribers, but, the pace at which they are losing subscribers has become much more critical in that sense. So there are lots of positives that can help the stock, but, I'm not a big believer in the fact that these turnarounds give you great reward. We've seen that happen with a Suzlon or something where a penny stock has kind of doubled in the last 1 year and all, and people anticipate the same thing. But in case of Vodafone, I think structurally the environment is very different. There's no leadership there, unlike Suzlon, where, why I'm comparing these two, Prashant, is for the simple sake of simplicity, where people kind of say, if, something which was sub 10 has moved to 20 plus, why not look at Vodafone, which could be the next turnaround? So these turnarounds could take very different trajectories, and Vodafone will have to be given much more time. And at every rise, you will see some selling come in. So that kind of puts a lid on the way the stock would probably move up very steadily. So be careful about that is what I would advise people. But there is very clear underlying structural change, which is making it much more acceptable as a third incumbent in this space, because the government has clearly demonstrated that they need that three-player market to kind of perform healthily from a competitive standpoint.
Okay. All right. Prakash, just stay on. We have to address one more development that could be impacting rice stocks today. India has imposed partial curbs on basmati rice exports. What could the impact be on some of the rice exporting players? We have Ashwini Kumar Arora, MD and CEO of LT Foods, joining in. Mr. Arora, good morning. Thanks for being with us. Our understanding is that the curb has come in on shipments, which in terms of value are below $1,200 a ton. Your first thoughts on the curbs, can you give us more details, and does this impact you?
So as far as LT Food is concerned, it doesn't impact us, because LT Food export, the aged rice and premium rice and in our own brand. So it will not impact our realization is more than that. But as far as the industry is concerned, where, mostly parboiled rice goes, may impact. So our association is going to in discussion with the government for corrective things.
So you're saying, Mr. Arora, that you generally export the premium category, and the category that's getting impacted is the parboiled rice segment, right?
Yeah, that which goes to the mostly to Iran and other part of the world.
Okay, and you have absolutely no contribution in that space.
No, we don't export to Iran. Yeah.
Okay, so you don't export to Iran, and primarily the export restrictions are to that part of the world. Got that? If you can just tell us overall for the industry, what would the impact be?
So as I said, industry may get impacted because the new crop is coming, and where the fresh crops goes, so we'll have a lower pricing. So we are going to discuss with the association is going to discuss with the government today, and we'll see how.
So, Mr. Arora, just to clarify, you mentioned parboiled rice. That was the talk up until Thursday and Friday. From what we understand, there's a fresh notification also on basmati rice exports. Can you tell us the average value of shipments, the threshold? There is a curb on export of basmati rice. That's our understanding. not just parboil, I repeat, basmati rice exports, where the value of the shipment is below $1,200 a ton. So can you give us a rough, ballpark average value of the shipments that you do?
So we do on an average, I don't know the exact number, but that's more than average, more than 1,200.
And what's the differential? I'm just trying to understand, what category, because basmati rice itself will have so many categories, right? Just trying to understand what percentage of basmati gets impacted, if any at all.
So, as I said, there are two types of export is happening. One is the aged premium rice in the branded play. So that get a better realization, and mostly the white rice. And the parboiled rice, there it goes to Iran and Iraq, and get lesser realization. So the impact will be, I will say, on if India exports 4.5 or 4.6 million tons, the impact may be on the 1.5 and 2 million tons. That's
Right. Mr. Arora, but the basic kind of the aim seems to be to restrict exports, right? For sufficiency of rice here in India. That seems to be the broader kind of aim here. So do you think it's a matter of time before it gets extended to everything?
No, I'm not sure, the aim is to curb basmati export. The idea is to that, if they will not put any MEP, there may be some non-basmati export happening under that umbrella.
No, my point is that...
The idea is very not to curb basmati export.
Okay, so okay, you're saying that there's no chance that there's going to be curbs there. That's clear. You have it from
that's clear. That's clear.
You have it from interactions with, industry interactions with government, etc. That's not the intention.
Yes, yeah.
So if there is no chance at all of a curb on basmati exports, what is the discussion that will be taking place with the association today?
So maybe, reducing the MEP.
Reducing the MEP, okay. Okay, so that is the main focus area, the agenda of the meeting, to reduce the MEP. Got it. So what kind of, can you tell us what is your own rice exports that you've seen in Q2? What is the exact figure that you've done? And what is the expectation over the next couple of quarters?
Yeah, Q2 will be in line with the Q1. So we will be delivering as per the plan.
So can you give us a number? Because I think it was about 7.3 million or so. Compared to that, what is the expectation for the full year?
7.3 million, I don't know from where this number is coming. But LT will be delivering, around double-digit growth this year.
That's double-digit growth in terms of volumes? Or are you talking about revenue? Value. Okay.
Yeah, revenue.
So far in the second quarter, Mr. Arora, how much are global realizations up? Just trying to get a sense of, the buoyancy in the market in terms of pricing.
So in terms of the value growth, we have delivered roughly 18% value growth.
18% value growth is what you've delivered, and that's something that you hope to stick to, right, for the rest of the year?
That's what we are expecting.
Okay. And on the margin front, I think you earlier had said that 12-13% EBITDA margins is something that is sustainable despite the higher freight costs. How is the situation on ground now? Is this something that you can hold on to?
We are positive about that.
Okay. All right. We'll leave it at that, Mr. Arora. Thanks a lot for joining us and clarifying all that's been taking place. So the aim is not to curb basmati exports by the government. And today's discussion is primarily for the minimum export price and the discussion surrounding that. They continue to believe that the export restrictions that have been announced will not impact LT Foods at the moment. It's more for parboiled rice that impacts, geographies like Iran. They do not service those geographies. So no impact there. But in any case, the stock was under pressure, down almost about 6%. Let's do one thing. Let's take a quick break. On the other side, we'll talk about the trade setup and how you can expect the market to shape up today. Anuj will be joining in for that. Post that, the top stock picks for the day from our technical and F&O experts coming up. Stay tuned.
Okay, welcome back. There's 13 minutes to go for the pre-open session. Anuj is here with a quick check on the trade setup. Anuj, morning.
Morning, Prashant. Well, big week for the market, right? Starting today itself when we have the Reliance AGM, which starts at 2 p.m., of course. So the last 1.5 hour would be dominated by that, and it will have an impact on the Nifty, of course. F&O expiry this week, the trend has been quite weak. The Nifty made a new series low on Friday, and it's been trending lower, actually. Normally, such kind of series end at the trending point or the lowest point. So let's see. Now, Jackson Hole Summit, the market's taken a key takeaway that perhaps there would be a pause in September. Powell didn't say it himself, but the market assumed that there would be a pause, and that's what you're seeing in terms of the global markets. This China stimulus announcement, I think, for the market, I think could be very interesting, though previous measures have failed in China. So let's see. As of now, 3% up in Chinese market. The Indian market texture is very poor. Sell on rally. It's been all through this month. And there's no reason to believe that that changes, at least in the near term. And there were first signs of profit taking even in the broader market. Coming to the levels then for the Nifty, I think the first resistance is placed at 19,340, which is Friday's high. And the bigger resistance is 19,432, which is based on the options. And if you look at the support, first support would be the Friday low of 19,229. And the bigger support is 19,187, which is options based. My sense is that if that gets under pressure, then there could be some serious unwinding in the market. On the Bank Nifty, while the session was weak, there was decent close on Friday. It managed to protect 44,200, the previous breakout zone. That is where the first support is. And the bigger support is at 43,925. The significance of 43,925, it's the rising 100-day moving average. That's where the Bank Nifty has been taking support. But the problem for the Bank Nifty is the falling 20-day moving average. The first resistance is placed at 44,359, which is Friday high. But as I said, the way it violently rejected the 20-day moving average last week on the expiry day, that is on Thursday, tells you that that's going to be a crucial resistance for the Bank Nifty and tough to cross that. That level is placed at 44,575.
Okay, Anuj, thanks a lot for that. So that is what the setup is looking like today and all the key levels that you need to watch. But let's get our guests on board. Mitesh Thakkar, Sudarshan Sukhani joining in. Gentlemen, morning to both of you. Sudarshan, how are you feeling about the markets now? Do you think that this is a market that's a sell-on rally situation because of, what you've seen, not just with the headline index, but even with the Bank Nifty and how it's come off the highs? And what are the levels to look at today?
Yeah, good morning, Sonia. See, once we enter into a correction, the markets become very unpredictable. It's much easier to go with the primary trend, and the primary trend of the market is on the upside. So while we were rallying, this was an easy market to trade in, easy market to talk about here. But the correcting market is difficult. So it's better to accept that reality rather than, for me to force trades that may or may not exist. We are in a correction. There's absolutely no sign that this correction has come to an end. And since that is my view, the best trade is to avoid doing anything in this market. If at all a trader must trade, and that would be a silly thing to do, but if at all, then take some intraday trades in whichever side you get momentum. And I cannot explain which side. It could be both sides on a day. But correcting markets are best avoided. The Bank Nifty is a different story. That's very surprising. The Nifty has been making consistent lows, but the Bank Nifty has held on to the lows that it made a few days ago. So if at all you see a buying opportunity there, take an intraday trade on the long side. Do not go short in the Bank Nifty. But for the Nifty, it's an avoid completely.
Okay, and avoid on the Nifty completely. Mitesh Thakkar is also with us. Mitesh, how are you feeling about the market now? Also, more than the Nifty, I think the bigger concern is on the Bank Nifty, right? It's down 5% from its recent peak. Is there any recovery in store over there?
Good morning. So, we've been calling for some consolidation and a test of 19,200 on the Nifty, and that's nearly been done. Now we are close to that level. The important part is that we should now not break below it and then try to give some reversal signs. That has not yet happened. So I think what I'll be watching closely would be the ability of the Nifty to get past 19,350. If that happens, we'll even attempt to long over there. Similarly, the Bank Nifty also has gone through a correction and is now at important support levels. Anuj was also highlighting that. This range of 44,000 to about 43,500 is filled with multiple support areas on the daily and the weekly chart. But again, waiting for some kind of reversal to come in before we venture on a long position. So broadly in wait and watch mode for both the indices, but not extremely negative. My sense is that in case the Nifty manages to hold 19,200, we'll see a reversal possibly in 3 or 4 trading sessions.
Okay,
Mitesh,
that by the way.
Sorry. Mitesh, what about individual trades?
Yeah. So I have a mix of buys and sets. Persistent is a buy with a stop at 5094. And here I would look for a target of around 52.40 to about 52.50 on the upside. One stock which did very well on Friday and in the last week in a falling market was India Post Housing Finance. That's a buy with a stop at 166 for targets of 186. And I have 2 sell calls which are conditional sell calls. Tata Consumers, if it breaks below 827, go short with a stop at 839 for targets of 805. And SBI Cards is a sell below 817 for targets of 790 and a stop at about 830.
Okay, by the way, the ticker just alerted you about block trades in Zomato. Now, our colleagues have been pointing out that the lock-in period for some of the key investors like SoftBank ended on Friday. So we need to see if some of those marquee investors are sellers in today's blocks. Of course, we'll have to wait for the end of day to get the data in. But that's the stock that's going to be in focus as well. So, Darshan, what stocks do you have your eye on today?
Well, we'll start with something cheerful. Asian Paints had a big decline. Then it's consolidated and broke out on Friday. Now, it is possible that this stock may do its own thing even if the Nifty is not stable. Asian Paints is a buy with a stop under 31.40. IGL, which is in a bear market, is an intraday short with a stop above 446. Jindal Steel, unfortunately, has made a fairly bearish pattern after a decent rally. That suggests that a large correction is imminent. It's an intraday short with a stop above 646. And Titan may be a buying opportunity. After the correction, the stock shows signs of rallying. So consider buying it with a stop under 3,030. So 2 buys and 2 sells.
Okay, 2 buys and 2 sells. All right, got that. Thanks, Sudarshan, for that. And thanks, Mitesh, as well, for joining in. Well, let's do one thing. Let's also get Chandan Taparia, who's a derivative and technical analyst at Motilal Oswal Financial Services, to speak to us about the market and how he's feeling. Chandan, more than the market, which has been so range-bound and frustrating for traders, I'm interested to know what the individual stock ideas are for today. What are you looking at? And, of course, your levels on the index as well.
Good morning, Sonia. Thanks for having me. So as you said, that market got stuck in a range and frustrating to the traders. Yes, we have seen the mixed cues here. If you look at the bank Nifty, that is holding the gains, but Nifty is trading at the recent lowest level. So 19,350, 19,440 is going to be hurdle till we remains below the same. We can see the decline towards 19,100 to 19,000. But bank Nifty is holding the support. So in that, we have to take the mix or positive to range-bound bias. So directly looking at the stocks, first that is buy on Asian Paint. This stock has given a breakout of last consolidative move of 6-7 trading session. It has surpassed a falling supply trend line. Some long build-up is also visible in the counter. So expecting an up move towards 3,400, one can buy with a stop loss of 3,175. Second trading idea, there is buy on Persistent System. Persistent, Bsoft and few other IT stocks are comparatively doing well. Nifty IT is holding, and Persistent has been making higher tops, higher bottom on the daily and the weekly chart. Supports are gradually shifting higher. So expecting further up move, one can buy with support of 5020, and this rally can extend towards 5330 level in Persistent System. Last trading idea, that is sell on ABB. This stock has given a breakdown. We have seen multiple tops built up of short positions, and the stock has broken the immediate key moving averages. So correction of 4 to 5% can be seen from current level. So one can sell ABB with a stop loss of 4340, and the stock has potential to drip down towards next support of 4,050 levels.
All right, thanks a lot for that, Chandan. Let's do one thing. Let's take a quick break. On the other side, we'll have the pre-opening rates. Also, Karan Taurani of Elara Capital will put focus on Z Entertainment as Puneet Goenka seeks a stay on SEBI's order to bar him from taking any positions in the Z-Sony merged entity. More on that coming up.
Okay, welcome back. Prakash Devan is still with us. We're also kicking off the pre-open session, which is up on your screen. It's all over the place, really. But we'll settle down. The rupee will start trading as well. The dollar, of course, has been strong. The dollar index actually has been strong above the 104 kind of level. So we'll see where the currency here comes up as well. Prakash Devan is with us. Prakash, the one particular space which has been doing very well are some of these hospital names, not the big Apollos and the big large hospital chains, but smaller ones. Last week was fantastic for them. Shalby, Yatharth, and Kim's, and so many others. Which is the pick? I mean, if one had to buy now out of the lot.
So Prashant, to be fair, the valuations have started getting into a little bit of a stretch territory for some of these hospital names. But if I were to still kind of stick my neck out and pay a premium to the valuations and look forward to continued growth, it would be Narayana Rudale, because NH has been on a tear in terms of its operational performance. The kind of expansion that they invested into in the last 2 years have started paying off so brilliantly. And my sense is from a capital efficiency perspective, they stand out among the smaller mid-size names. You of course have the likes of Apollo and all, which continue to give you a very robust kind of standing in the portfolio. But the volatility is also going to be much higher in some of these bigger names. I mean, and there's a lot of inorganic growth that you could look forward to. I mean, you've seen Fortis finally wanting to acquire Gleneagles. You have some of the other names that have been talking about acquisition, including Shelby and all. So there's a lot of activity around this space, and there's still huge headroom. But from a valuation perspective, you would have to wait for lower valuations to kind of lower levels to kind of get in. But NH is the only one that deserves that kind of a premium, and I would believe it will continue to deliver very superior, industry superior metrics even going forward.
Okay, by the way, the pre-opening rates are now settling in. So, just take one look at that before we move on. It's going to be flat, but with a bit of a positive bias. That's what the Nifty is indicating. And a couple of these stocks, Apollo Hospitals, Adani Enterprises, Adani Ports. Let's take a look at Reliance ahead of the AGM and how it's looking as well. So keep an eye out on that. A couple of these defense stocks continue to be in focus on the back of very good moves last week and some new orders as well. So do look at that. Zomato. We'll talk more about the block deals that are likely to take place in Zomato in a bit, but that stock in pre-opening is up about 4%, and BEL has won some orders, so that stock is in the green as well. But let's shift the focus now on Zee Entertainment. The latest in this saga is that Zee promoter Goenka has moved to the Securities Appellate Tribunal, or the SAT, against SEBI's 8-month ban from holding key managerial posts in the Zee-Sony merged entity. To discuss more on this, Karan Taurani, the Senior Vice President, Research Media Analyst at Elara Capital, is joining in. Karan, this has become such a big drag. I think we've been talking about this merger for the last 8 months now. And once again, there are perhaps more delays in place. And, if you map the stock, right, initially there was this sort of jubilation about the merger. But then everything sort of fizzled out. I mean, the last 1 year, the stock has done nothing. Do you expect more delays? And what's your view on, the latest developments?
Right. Hi, Sonia. Morning. So I think if you look at, what has been happening, it is clear an attempt, by Mr. Puneet Goenka to try and make sure that, he should be a part of the KMP and the merger should go through with him. But clearly, with SEBI, kind of given their verdict that, the decision may not come before 8 months because of more investigation needed in this case, it seems highly unlikely that he could get some kind of a relief in the near term. So I think it is obviously a methodology wherein he will obviously try his best, for him to be a part of the merged co. But what we, primarily believe is that, we don't foresee Sony waiting for 8 months for the merger to happen. We believe that there's a higher likelihood in this kind of a scenario for the merger to go through without him, because the decision will come after 8 months and Sony may not wait that long. And as far as Mr. Goenka is concerned, he's obviously come out in open and said very clearly that the merger will not be delayed further, just primarily because of his issue with SEBI and SAT.
Okay, so Karan, basically you don't see any hiccups because of this. Do you think this will be a fight that Mr. Goenka puts up parallelly, X of the merger, and merger goes on and maybe a different person takes up the mantle of the CEO?
Yes, absolutely. I think that's what we've been maintaining, that, the merger is very much on track with or without Mr. Goenka. I think, they should start, submit the application at ROC, this approved NCLT order. And the process will, kickstart then. And I think it's about a 6 to 8 week process wherein I think for 4 to 6 weeks, Zee will get delisted and then you'll have the merged co, Sony Zee getting relisted. So the entire process is about 2 months odd. And by first week November, if everything goes well, we should see the merged co getting listed.
Okay, so the merger will go ahead with or without Mr. Goenka. Got that. So once the merger, once this, of course, goes through in its entirety, what does this mean for the stock? Because, like I was mentioning at the start, right, the stock has done nothing. I think if we can just pull it up, it was a year ago, it was 250 rupees. Now the stock is at 265. So for the average retail investor, when do you see that sort of pick up in the stock?
So I think one thing is there right now that, there is some sort of uncertainty in the investor mind that, there could be a further delay on this merger because of Mr. Puneet Goenka going to SAT, for, appealing against this SEBI order. But potentially, we don't see that as a risk whatsoever. So that's one thing, which is not there in terms of a big risk for now, as per our view. Second thing is that, there is also some uncertainty around this delisting process in terms of, how things will happen, because this has never happened that, like 6 to 8 weeks, a company gets delisted from the exchanges and gets relisted. So I think that's some uncertainty on the retail investor mind as well. So I think once these roadblocks are more or less cleared over the next 2 months, there is definitely a high likelihood of the stock reaching 340, 350 levels. And that's primarily because of the valuations. That's primarily because of the MNC company coming in, better corporate governance issues, the entire merged co synergy that we've been talking about. So I think there is a good amount of 25-30% potential upside from current levels as well. But it may not pay out immediately in the next 1 to 2 weeks. It may take 2 or 3 months to play out, but that is very much on the cards.
Karan, since we have you with us, let me throw in Sun TV. I don't know if it's under your coverage or not. Do you cover Sun TV first of all?
Yes, we do cover Sun TV.
Okay. Stock's been running. It's gotten really active, some 12-13% up this month itself. Also active in F&O, our colleagues tell me. Any thoughts here?
So Sun TV, I think, is a very compelling story. I think, we've been pushing this stock since, more than 2 years now. But what has happened in Sun TV is that, IPL revenues have come high for all the companies post the media auction rights which were there. And Sun TV anyways is making very good profitability of about 60% EBITDA margin, which is highest, versus peers. So if you value Sun TV, excluding the cash and excluding the IPL business, which is somewhere close to $1 billion odd, the core TV broadcasting valuations was around 3.5-4 times, before this up move happened. And currently the valuations are about 6 times for the core broadcasting. So I think there is still potential upside of almost 25-30% on Sun TV, primarily because of re-rating of the core broadcasting business. Now, the only thing is that, in broadcasting business as such, they haven't expanded towards digital. They're not investing in fresh content. They're not investing into originals for Sun Next. But the profitability remains to be very high. So if you compare them to any other broadcasting giant, I think they are the highest in terms of profitability. So I think that works well for Sun TV.
Let me just extrapolate that question on ad revenue and just ad spends overall for the TV sector. Are you expecting the rest of the year to be pretty buoyant? What's the increase in ad spends on broadcasting? And also a quick view on digital, the way spends are just shaping up, and what do you expect for the next couple of months?
Broadcasting ad spends, I think, they've seen a very sharp recovery in the post-COVID era. I think last year they were at close to 95% of pre-COVID. And this year there's been some sort of a decline again on a Y&Y basis. And this year in FY24, we assume that they will probably breach again towards that 95-96% mark of pre-COVID levels. So they haven't seen complete recovery as far as pre-COVID is concerned, but it's one of the resilient medium today in terms of traditional media. Also, a lot of things have worked unfavorably in terms of the external environment for them. And that's the reason, for them not coming back to pre-COVID levels. But I think the festive season for the next 2 months is going to be very strong. You are going to see new launches. You have this combination of, festive and World Cup. And plus, a lot of these FMCG companies will also start to spend more aggressively because they've been waiting for inflation to cool off. So I think putting all these things in perspective, TV ad spends will see respite in H2, and many companies will also see a benefit basis that.
All right, we'll leave it at that. Karan, thanks a lot for joining in. Appreciate your thoughts here. That's on the media stocks and the way forward. By the way, let's get some 9-10 calls going because looks like it's going to be a decent start for the market. 30 points in the green for the Nifty, and a lot of stocks actually in focus today. BEL, Zomato, Vedanta, Patel Engineering, all trending in the green. BHEL as well. So, Sudarshan, let me get your view in. What's the 9-10 call?
Asian Paints is a buy with a stop under 31.40.
And Mitesh, how about you?
You go with the buy on India World Housing Finance with a stop at 166 for targets of 186.
Okay, let's also get the momentumizer stock of the day going. Sonal is joining in now to tell us what is the stock on her list this morning. Sonal, good morning. And of course, from the entire team of Bazaar, wishing you a very, very happy birthday. Hope you continue to have that bright smile on your face through the course of the year. And hope you have a great day. What's on your list?
Thank you so much for that, Sonia. And on my momentumizer list today, I have Parag Milk Foods. And that's because the stock has seen a massive move, not only on Friday, but this year as well. It's up around 97% this year itself. It was up 16% on Friday. And on Friday, the volumes were massive as well. Volumes on NSE were at 1.7 crores, which is more than the volumes that the stock saw in last 7 trading sessions. If we talk about the value as well, 343 crore rupees traded on the NSE itself, which is equal to the value traded in the last 13 trading sessions. So a lot of momentum that is building up here. In June, we did see that the fund 6 Sense India Opportunities Fund acquired 2 lakh shares via open market. So they might have seen some fundamental improvement, but important to note that their profit CAGR in the last 5 years is negative 19%. Their return on equity is negative 6% in the last 5 years. So these are some things that we need to keep in mind before looking at that stock fundamentally as well.
All right, Sonal, thanks very much and enjoy your day. Well, let's talk about the next one, which is the standout brokerage note. And Nimesh is eyeing Avenue Supermarts.
Yes,
UBS
Prashant.
is out with a call. Go
Yes,
on.
Prashant. So it's a technically a double upgrade from UBS and Avenue Supermart. They've upgraded the stock to buy from sell, and they've raised the target price sharply to 4,700 versus 3,700 earlier. Now, UBS believes that the cyclical parameters are now turning positive, while the structurals still remain strong. Now, structurally, they see a room for DMart to coexist with Reliance Retail as a large national player based on the studies of various global markets. So they've raised the FY25 estimated revenue, EBITDA, as well as EPS between 3 to 4%. And in the medium term, UBS expects that new store additions as well as discretionary spend could act as an upside catalyst. So a double upgrade technically from UBS on Avenue Supermart. Target price now raised to 4,700.
That's quite an increase. 4,700 stock right now is at 3,500. So that's a long distance away in terms of that target price. Let's see, not much reaction, at least right now in the pre-open. We'll see how the day goes for Avenue Supermarts. Let's move to the next one, and that is Zomato. By the way, Zomato is surging 5%. We have Nisha, of course, joining in to talk about all this block deal buzz. But let's also remember there's a lot of talk about a platform fee, a 2 rupee platform fee that it seems Zomato is now going to start levying or has just started levying on all the transactions. So, Nisha, you tell us, block deals absolutely in focus as well.
That's right, Surbhi. There are two factors which are going to impact the Zomato stock for the trading session today as well as for the week as well, because there are three venture capitalists whose lock-in period after the Blinkit transaction 1 year back really ends last week, and from today it's going to be tradable on the exchanges. So SoftBank, Sequoia as well as Tiger Global, all of their shares lock-in period ends in Zomato, and we have already seen one block deal of 0.4% stake of Zomato already being traded in blocks, and more are expected. Sources have told us that SoftBank with 3.35% stake definitely is one of the sellers, and Sequoia and Tiger Global could also be the sellers in the market. Remember that the implied value of the stock of Zomato was 70 rupees at the time of this transaction, so they are in the money with the block happening at 90 rupees. But of course, the platform fee of 2 to 3 rupees. If there is stickiness for this, then the profitability of the company could be sooner than expected, is what Morgan Stanley has stated, and that's what is giving some euphoria to that counter.
Okay, thanks a lot for that. Well, if you look at it, of course, the stock price in the last 1 year has been one of the big movers, right? I mean, in the last 6 months or so, the stock has gained about 80%. Now trending at almost 100 rupees.
2 rupees, maybe 3 rupees more per order, along with the delivery charges. I'm just thinking of that.
Well, if you're used to it, then, I mean,
can't help it. It's habit.
It's not going to change your habit, exactly. But the market is making me a little hungry, actually. Maybe we should place that order.
Starting with all the talk about rice, and now there's Zomato.
And now Zomato.
Okay, but let the market open for the day, and then we'll place our order. The first tick on the index, almost 50 points in the green. So it looks like it's a good start. The sensex up about 100 odd points. The bank nifty well in the green as well. And the mid-cap index are soaring. So not a bad opening at all. In fact, the advanced decline ratio also is well in the green. Almost 1,900 stocks on the advancing side. Now let's take it straight to the large caps. You have L&T, SBI, ITC, Bajaj Auto leading from the front. Adani Group stocks are looking good. That group, in any case, has been in the news. So Adani Enterprises up 3%, Adani Ports up 1.5%. Steel stocks are not doing too badly. Tata Steel, JSW Steel in the green right now. And you have a couple of more names, actually. Coal India, Tech Mahindra, Hindalco, ITC are trending in the green as we speak. On the downside, though, I was talking about how these, domestic economy-facing stocks are under a bit of pressure. Britannia, once again, is down about 0.3%. HUL is in the red as well. Nestle, Tata Consumer Products, Bajaj Finance, a couple of other names that are in the red as we speak. Titan as well, not doing that well this morning. But otherwise, it's a decent opening. No two ways about that. As we said, whenever the market gets to the lower end of the range, there's buying, and that's what's spiking today. The mid-cap end of trade, though, is doing much better.
Oh, yes, absolutely. It's a big move on mid-caps. I'll quickly start with the newsmakers. So since we were just talking about it, Zomato is, doing well, 3.5% up. Let's not forget Indostar. Indostar has sold off a large chunk of its loans to one of the ARCs, and obviously they receive money for that. 5% up on that stock as well. Some of the Adani Group stocks are up and about. Remember, a lot of the Adani stocks are going to be in focus because the matter comes back up in the Supreme Court tomorrow. Some green on the stocks for now. Ambuja, Adani Total Gas, the bigger ones, Ports Enterprises. Basically, there's some smatter of green on Adani. Linde, because of the big order coming in from SAIL India, 3% up. BHEL, BEL, a lot of these PSUs have announced order wins over the weekend, and most of them are holding up positive as well. So these are some of the key newsmakers. Now the rice guys, there's some additional red. So we need to see the exact flow through in terms of impact. If there is a ban on rice exports, basmati rice exports in excess of $1,200 per ton, KRBL LT Foods down about 2 to 3%. Those are some of the names on news. But even beyond news, there's a buzzing screen out there. Look at India Cements, look at Piramal Pharma, look at some of the other names like NMDC Steel, which have been active. So not bad. For the time being, Prashant, mid-caps outperforming the large caps.
Oh, yeah, absolutely. And it's a very vibrant screen. 5:1, by the way, almost in terms of advances to decline ratio. I think you guys mentioned Atul Auto. Atul Auto had a big week last one. So it was up 25% last week. And this morning, it's up another 6%. So that's a very large mover with very large volumes as well coming through. There is Sirma, which is up 5%. Again, just highlighting things with the largest volume. Sirma is at about 564. You look at Adani Enterprises, I think we mentioned, that is, of course, up about 3% or so. GMDC has been a mover off and on, but this morning it starts about 2.5% higher. There is Gabriel India, which is up 5.5% on decent-sized volumes for this point in the day. And there is Bajaj Hindustan, India Cements, Jamna Auto, which are some of the other large movers. Skipper Limited is another one, which is up about 205 rupees. That is coming up with about a 6.5% pop right now. So, yeah, I mean, there is a lot happening. On the downside, I can't see anything large at all. I mean, KRBL with a 2.5% cut is perhaps the biggest volume-led loser. Otherwise, it's mild. Bajaj Finance, for example, it's down a little bit, 0.5%. Titagar is down 1%. HCL Tech, Parag Milk and Emphasis are some of the others, which are starting a little lower right now. APL Apollo is down 1.5%, so keep an eye out on that. And as I said, I mean, overwhelmingly positive, at least in the broader market, mid-cap side with 5:1, a kind of advances to decline ratio. Let's so welcome in Rahul Singh, Chief Investment Officer, Equities at Tata Mutual Fund, who's joining in to take some questions. Rahul, good to have you with us here as always. Thank you very much for your time. So stay on track, stay invested, stay fully invested. Rahul, is that the advice? Should one start to think about mid caps versus small caps and large caps versus mid caps and that kind of thing, or it's okay out there, even mid caps and small caps?
Yeah, hi, good morning. I think stay on track is the right message, whatever was your asset allocation between equity, debt, or large cap, mid cap, small cap, because each investor is different. But stay on track probably is the right message, because what we are seeing is continuation of what we have seen in the last 1.5 years, really, that the Indian economy is seeing a broader recovery than what we have seen earlier, even though we are not, nowhere near the heady days of 2006 to 8 of 8-9% GDP growth rate. I think 6.5% GDP growth rate with a broad-based growth is definitely something which is leading to a broader market movement and not just large caps. So therefore, we are constructive on small and mid also as a segment, because that's where most of the resurgence, or let's say the revival, seems to be happening, given that last decade was really not something to write home about in terms of the investment cycle. And that is the one engine which was missing from the economy, and that is the engine which has restarted in a small way. So therefore, I think the idea is to stay on track, and I think whatever we are seeing in the market is a healthy consolidation phase, I would think.
Okay, a healthy consolidation phase, and the idea is to stay on track. Rahul, thanks a lot for joining in and speaking to CNBC TV18. The one space that has made a big comeback this year is capital goods. And I'm talking specifically about L&T. I mean, this year, if you map it, right, L&T is up almost 30%. And we do know that there is a bit of a revival in the capex cycle. These long cycle, diversified EPC companies have started to do very well. Is there more to go? Do you think this is just the start of the upcycle here?
We can't comment. I can't comment on individual stock, but overall, as I mentioned, I think the investment cycle has three legs: government, private sector, and households. Government, obviously, last two budgets, you've seen that they have used more of the fiscal deficit for capex rather than opex. You look at the private sector, the capex revival is definitely real. Some of it is because of competition like cement, etc. Some of it is because of China Plus One. Some of it is because of energy transition. And also remember that the balance sheets are quite clean. Companies are generating cash flows. Bank balance sheets are the cleanest they have been in the last 10, 12 years. So overall, it's a perfect situation for investment cycle to start reviving. And the last leg, which is the individual, the household, you've also seen a revival in the real estate. So basically all three segments of the capex cycle or the investment cycle are doing well. So I think the chances that this sustains are pretty good because the drivers are not just one. For example, in 2006-08, it was just infrastructure. Today, it is infrastructure, it is energy transition, it is China Plus One, and real estate. So the chances that even if one of the drivers slows down or falters, you would have some of the other drivers leading to a sustained investment cycle performance. And as I mentioned, we may not see the heady days of 2006-08 when the investment cycle or the GFCF growth was 15-16%. But even a high single digit is good enough to generate growth for the companies, especially in small and mid.
Got that. By the way, the market slipped into negative. So the bulls are not going to like this on a day when you have so much of green on global screens and you have Asia up between 1.5% to 2.5%. We are not finding a follow through, at least on the headline indices. A little tinge of red on the Nifty. The low, just to keep it in mind, Friday's low was 19,229, roughly 19,230. We're far from that, but let's see. Bulls are finding it difficult to retain the momentum. Already flat for the timing. Even the mid-cap market has cooled off from the day's high. Rahul, hi, good morning. I guess purely from a Nifty perspective, while, as you say, a lot of the macros probably are in place, but purely from the Nifty perspective, the last 1 month has been interesting because FPI flows have reduced compared to the deluge that we were getting in April, May, June. Maybe the data is skewed because of all the block trades that are happening, but the net number is lower compared to the highs of earlier this year. And B, there seems to be lack of leadership. IT stocks, not quite the torchbearers. Banks have been underperforming as well. What do you think is going on, and what can be expected, say, over the next 6-8 months as we get into the interim budget and then eventually to the general election?
Yeah, so I think we also have to remember that the interest rate narrative globally has changed a little bit. We were looking at 3.5, 3.6% US 10-year, and now it's 4.2, 4.3. So clearly there is a 50 bips movement there, and the narrative on the inflation is kind of become a little bit more hawkish than what was at the margin. It has become more hawkish than what it was, say, 1 or 2 months back. So clearly that is getting reflected in the consolidation phase, which I mentioned in the markets, and I think it's healthy. What we don't want is a runaway market because the macros for India are good. The broad-based recovery is in the investment cycle, and the fact that India is growing faster than most other emerging markets means that what we don't want is a runaway market or a bubble. So this is something which has come at the right time. I would think that the interest rate movement or the confusion around which way the interest rates are going to go, rather than everyone assuming that there will be a rate cut in 3 months, 6 months, maybe the market is now probably 50-50 that there is going to be a rate cut or not this calendar year. So I think that's a good position to be in because it allows India to continue to grow at a steady pace, be in a situation which is a sweet spot, and continue to sustain this valuation premium which we are at today. And as I mentioned, I think as far as leadership is concerned, I won't really delve too much into it because when the economy is becoming slightly broad-based, there is unlikely to be a clear leadership sector-wise. And that's fine. I don't think that is necessarily a limiting factor for how the markets might shape up over the next 6 to 12 months.
Okay, just before we let you go, Rahul, then, just one question on what the big risk factor is now for the markets. Of course, we're heading into an election year as well. There is all of this talk about perhaps the US entering into a recession. Are any of these factors something that could derail the market in the near future, or do you think this uptrend is intact in the medium term?
I think the risk factors have to be commodity prices and crude as far as India is concerned. These are always risk factors, but right now there is a little bit of complacency there. I don't see much changing there though, but there is definitely complacency there. So that is something which I would worry about, especially if China comes out with a stimulus, again something which we don't know about, but that revives the commodity prices and crude prices. Then we are potentially looking at some of the macro factors which is leading to a sweet spot, which I mentioned earlier, kind of getting diluted for India. And of course, the general elections remain difficult to call so early. That's something which we will have to assess as we come closer to that.
Okay, we'll leave it at that, Rahul. Thanks a lot for joining in. Appreciate your thoughts. Well, earlier, just a while back, we had a chat with LT Foods on the export restrictions on basmati rice, and the management clarified to us that the curb on basmati rice exports will not impact them at all. They said that, at least LT Foods said that the export restriction is largely for parboiled rice that impacts geographies like Iran, etc. But what will this impact be on other names? We have the management of KRBL joining in. Akshay Gupta, who's the head of bulk exports, joins in on the phone line. Akshay, thanks a lot for being with us. Your thoughts on what these safeguards on basmati exports, what does this mean for a company like yours?
Yeah, good morning. Good morning. So in regards to KRBL, there's a $1,200 MEP implemented for basmati rice. Again, for us, it will be a very limited impact because we are into consumer packs and mainly into the branded segment. So $1,200 MEP would, most of our, I think 90% of our exports would be above $1,200 mark. So I don't see a big impact on KRBL. And secondly, this regulation is implemented till 15th of October, which is just around 45 days from now. So, so the new crop will start coming in after 15th of October itself. So I don't think we could see a big impact on KRBL.
Akshay, just to clarify, so $1,200 per ton is the MEP till 15th of October. Now, the differentiation between branded and non-branded, as long as someone has, branded exports, branded packaged in a pack, and then the value is below 1,200, would that entity also be exempted? Or the first threshold is that, yeah, that's what I'm thinking. MEP is the first threshold, right?
MEP is the first threshold. Anything below 1,200 would be impacted. Anything below 1,200 would be, yeah.
Okay, so you're saying 90% of your exports are above 1,200, so not really a problem for you. What about, your peers and industry in general? When we talk about basmati rice exports, in general, are most people above 1,200, or what percentage would be impacted?
No, I would say, we've looked at the data as well, the export data. The average exports of basmati rice from India in the past year has been at 1,050 to 1,100. So that has been the average price. And those segments will be impacted because...
And what percentage would that be? Yeah, so what percentage would that be? The ones that are, as you're saying, 1,050 to 1,100, because they can't export anymore, at least till the 15th.
Right. So, see, most of the orders, since it's a annual crop from October to December, and we are at the end of the season, so most of the shipments for the year have already been made. It is just 45 days remaining for the new crop to come in. So people must be at the end of their contracts, just to complete the contract before the new crop arrives. So the impact overall to the industry would be limited, but there will be, I would say, more than 50% of the industry which will be impacted by this, but they would be finishing their contract. So I think small quantities would be impacted, yeah.
Okay, so the impact will be minimal. Got that. When we also spoke to LT Foods, they said that the value growth in the export segment is very good. I mean, they're looking at double-digit growth coming along, and they've done 18% growth already. Can you tell us a little bit about KRBL's growth? What have you seen so far, and what is the prognosis for the full year?
So, in terms of exports or just
Yes,
overall?
in terms of exports. Even overall, if you can share with us.
I mean, so we've always maintained that we'll maintain double-digit growth. So around 10 to 15% and annualized growth we see in Basmati market. I mean, India market is growing quite strongly because of the conversion from non-branded to branded segment. And even exports, we are getting into increasingly new markets and, getting new distributors on board. So we should see double-digit growth. I mean, we'll maintain 10 to 15%.
All right. We'll leave it there. Thank you very much, sir. Appreciate you joining in and running us through all of that. I mean, there is an important news flash at the bottom of the screen. The Kerala High Court has quashed the enforcement case registered against Mr. Nandakumar, who is, of course, the promoter of the company. So that is definitely positive. It's been kind of developments since have been going in that direction, but I think now this is in a way the court, from a legal standpoint, has completely quashed the proceedings which were initiated by the ED, etc., against the Manappuram promoter. So that's what we are looking at. Well, let's talk about Supreme Industries, which is the next company which is on our radar. They've signed a memorandum of understanding with Parvati Agroplast to acquire their PVC pipes business for 235 crores. To know more on this in terms of how this will sort of, add to Supreme, its capacities, its revenues, etc., we have Mr. MP Taparia, Managing Director at the company, joining us. Mr. Taparia, it is always such a pleasure speaking with you, sir. Thank you very much for your time. Prashant this side. And congratulations on the acquisition. Could you talk? Thank you, sir.
Thank you very much. Good morning.
Good morning. Could you tell us what does this take Supreme's total capacity to? Because the company that you're acquiring also, I think, has some other sort of new capacities which are to come on stream. Once completed, what will be the total sort of capacity addition to Supreme's capacity? So what will be the total capacity? What will it look like? And what's the revenue potential from this acquired entity, sir?
First, I must correct the number that we have acquired it at 171 crore, not at 235%, please.
Okay.
And our current capacity overall is 800,000 tons. And this company has installed capital 36,000 tons. We have made a plan to expand the capacity further of around 20,000 tons. And with the other ongoing investment program, we should be close to 900,000 tons by March 2024.
9 lakh tons by March 2024.
2024, yeah.
Okay, and this includes your own expansion, the expansion from the capacity of the acquired company, everything.
Our own expansion and also this company which we acquired, and plus the investment what we have committed. We are not clear when the final delivery will be available of the other equipment we ordered. Overall, the company had a plan to reach 1 million tons by 2024 December.
Okay, 1 million tons is the capacity that you plan to reach by 2024 December, correct?
Yes, please.
Oh, okay, all right. Can you tell us... Sorry, what did you say?
36,000 tons of this company present capacity and additional 20,000 tons we are adding. Okay. So 56,000 will be additional capacity coming because of this Parvati acquisition.
Okay, so additional capacity will be in excess of 50,000 tons because of the acquisition. Can you tell us this, Parvati Agroplast delivered a revenue growth, a compounded growth of almost 45% in the last 3 years, if I'm not wrong. Is this something that you can replicate, and what kind of operational margins can you get because of this acquisition? I mean, what will the blended margins look like?
Overall, this year we anticipate to earn 14% margin, and with this acquisition also, because they make oriented PVC, which is a high margin product, we hope that we will maintain our operating margin at 14%. This company, the seller committed to us that he will be able to get all the permission to enable us to operate the plant from 1st October. In the event we succeed to acquire the company on 1st October, then for the 6 months, we may get additional turnover of 120 crore rupees, and next year 350 crore rupees.
But sir, as you're saying, this company, Parvati Agro, it operates at similar margins as your margins, 14%.
No, Parvati is not able to operate the plant because they have got tremendous working capital problem.
Okay.
So they are not able to operate. But the capacity what they have created, we will be able to run the capacity fully.
Okay. All right. Got that. Also, the expansion that you'll be undertaking, that will be at this land, which is, I think just, this company also has a large parcel of land. And that's where the expansion will happen?
Now, overall, our capital investment now will reach 1,000 crore rupees, out of which around 800 crore will be required to pay in this financial year.
Okay. No, sir, I'm trying to understand that I believe that Parvati Agro also owns a large piece of land that's valued at close to 170 crores. What do you plan to do with the land? Or is that where the acquisition, is that where the expansion happens?
Land will be used by us for expansion capacity.
Expansion.
We'll be adding some new products. We'll be doubling the capacity of PVC pipe. We'll be doubling the capacity of OPVC pipe. And we are putting tank manufacturing capacity at the same site.
Okay. I got that. So, sir, the Parvati Agro's sort of clientele is largely all government bodies, right? Is there any, historically a problem on the receivable side, etc., for Parvati?
Sorry, say it again, please.
So, for the company that you've acquired, the clientele is largely government bodies, right? State government bodies, etc. Their clients are largely government bodies, government organizations. Is there any receivables problem there? Are there any pending receivables for the company?
We'll be factoring exactly as on end September. If the monies are not realizable, that will not be paid by us. We are not running any risk.
Okay. Sir, just one final question. You've also entered into this PVC windows and doors segment. Just wanted to understand a little more about that segment. What is the kind of growth opportunity do you see there? I think last time you said that it has a revenue potential of 350 crores. Is that in year one? And what kind of sustainable growth do you see in this new segment?
You see, we are putting a capacity to manufacture 10,000 tons of window and door. Okay. We anticipate that this is going to be a huge market. The China sold last year 4.5 million ton window and profile. India, we sold only 80,000 tons. We see tremendous opportunity in our country. We acquired land at Kanpur, 32 acres, and we will be now taking action to place equipment order, and we hope some product will come out in the year 24-25.
Okay. So what would this mean for the revenue potential by the end of FY25? What are you looking at year one, year two, post the capacity coming on stream?
When the plant comes, I can tell you properly, but I think on 5,000 tons, and we'll be installing immediately 5,000 tons. The revenue should be more than 150 crore rupees.
Okay, 150 crore rupees from 5,000 tons.
For 5,000 tons. Because it is we'll be making a window and we'll be selling window and we'll be selling profile. We'll be keeping hybrid model.
Okay. At what margins will this come, sir? And what margins?
Margins is better than 14% what we are earning. Because Finesta is one company. Margins are known. They earn more than 20%.
Okay. So, on margins, you said that margins for the full year should be about 14%. Correct me if I'm wrong. The number I have, what you said after the quarterly...
Our company, yes.
Yeah. You after the quarterly numbers, I think what you said was...
Our company margin... Sorry?
After the first quarterly numbers, sir, you had guided for 15% margins for the full year. So is there a bit of a drop-off that you are seeing?
I told our margin 14%. We told 14%. Very much. We told 14%.
Okay, then okay, fair enough. So 14.
No,
got that.
We told 14% plus.
Got that.
And we are looking quite robust.
Okay. So how is, broadly, I mean, for each of your segments, right? I mean, how is demand looking? Is it going to, I mean, is it looking as robust? Because volume growth was super strong in the first quarter. For plastic piping product segment, which is 75% of your business, how are things looking for the rest of the year, sir? Just give us an update.
Business are looking quite robust. There's good demand from agriculture, housing, and infrastructure. The polymer prices remain at a low level. There's no indication the price will go up. So we anticipate, as we told, that we will have volume growth 20% plus. And for piping division, we will have a growth between 23 to 25% for the year.
25% piping segment volume growth and 20% overall volume growth.
Yes, please.
Okay, all right. We will let you go on that note, sir. Thanks a lot for joining in. Appreciate your thoughts here on CNBC TV18. By the way, for the market, it's now cooling off a bit. So as we were telling you, it just sort of, the minute there is a bit of a rise, the market sells off, and we're seeing that happen. This morning, the pressure is on domestic consumption stocks. HUL, Britannia, Asian Paints, Titan, Nestle, all of these stocks, Tata Consumers, are all down anywhere between 0.5% to 1%. Let's take a quick break on that note. On the other side, Ramani Dati, the CFO of Team Lease Services, will be joining in to tell us about the hiring picture as well as the quarter gone by. Later, we'll be joined by Rajiv Rajgopal, the MD at Agso Noble India, to talk about the outlook on their business. Stay tuned. Welcome back. This is Corporate Radar on CNBC TV18. Let's shift focus now on Team Lease Services. The company's margins are on a declining trend. There was a sharp decline in profitability also for the company in Q1. They say that they continue to grow with their larger customers, and for Q2 they have a healthy pipeline. Ramani Dati, the Chief Financial Officer at Team Lease Services, joins us now to discuss their business outlook. Ramani, thanks a lot for joining in. You have articulated the reasons for the fall in the margins earlier, right? You spoke to us about how there's been seasonality as well in some of these edtech companies. There's been the core employee annual hikes as well that you had to look into. But have the margins bottomed out? And just trying to understand whether this is a structural problem or more of a cyclical in nature.
Yeah. So it's mainly two reasons specific to Q1, as you have rightly mentioned. So we have our core employee annual hikes impact as well as seasonality in edtech. And the second reason is our higher margin contributing businesses, which are the IT staffing and degree apprenticeship. So both of them had heavy headwinds in the industry right now. And that has impacted our margin substantially. Having said that, from Q2 onwards, from this quarter, we are expecting a steady improvement in margins, both in percentage terms as well as in absolute profits. Mainly driven by the growth in staffing business, because we are seeing demand across sectors, be it BFSI, telecom, retail, consumer. Across all segments, we are seeing good growth. As of now, the only segment where hiring is not happening is in IT. Again, within IT, the GCCs fortunately have started hiring, and we are hoping that that trend will continue for next couple of quarters as well.
Okay, so when you talk about, that trend continuing, can you tell us when do you think the margins can get back to that 2% plus mark? I mean, any kind of exit margins that you're looking at by the end of FY24?
To be very honest, without recovery of IT, I don't think we can get back to the 2% margins at the company level. And for the time being, we are focusing mainly on the absolute profit expansion. Like Q2, we are expecting at least a double-digit kind of EBITDA growth on a sequential basis, and Q3 being seasonally high for staffing business with the festives and all of that. So we are hoping Q3 will be our highest contribution, both in terms of headcount as well as margin. But this year, 2% we may not be able to get to.
Can the big sort of uptick that we're seeing, and there's a fair bit of excitement, Ramani, now around GCCs, right? And the large potential that they offer, can they, in some ways, over a period of time, counter, the weight that IT services has for you as a business? Can that be a very large opportunity? I mean, how much is that as a percentage of your business?
So 2 years back, our GCC contribution in our specialized staffing headcount used to be 30%. And that number has now substantially grown to 50%. So out of the 8,000 headcount we have in IT, 4,000 is coming from GCCs and captives, which is a very healthy growth. And we believe that in the coming years, maybe it may take 3 to 5 years, there can be an equal contribution from GCC, similar to IT services in terms of overall employment in IT.
In IT, you said that, until IT doesn't recover, you won't be able to get back to the 2% mark. Just trying to understand this whole IT slowdown, do you think it's a prolonged period of slowdown? I mean, how long do you think it could last, A? And I'm asking because, the companies are winning a lot of large deals, utilization levels have gone up. So do you think that it's just a matter of time before the IT hiring picks up as well?
Very difficult to comment when the hiring will pick up, because as of now, at least within IT services, we haven't seen any kind of green shoots. As I said, GCCs are hiring, and next 2-3 quarters as well, we have visibility of good amount of hiring there. But as of now, the volumes coming from GCCs are still small. So only with IT services demand recovery, we can see a substantial jump in the overall hiring numbers. And how long this can continue, again, there is no visibility. It's already been more than 4 or 5 quarters now. And can it be extended? Maybe yes or maybe no.
So what is the overall headcount that you anticipate in Q3 and Q4?
So in IT, there won't be, because typically Q3 is a complete off-season for IT hiring. Q4 also, it would be more or less kind of a very nominal growth. But general staffing, we are expecting very good growth in Q3, because we have the festive season, and across all segments, we do the maximum hiring in Q3. Q4, we should do more or less similar to what we have done in Q4 of last year.
So just leave us, Ramani, with, how you can sort of look out for the full year, considering all the trends that you described, with the IT still being subdued, but, the general staffing business picking up, as you're saying, the market's very buoyant. Overall, full year FY24, what's the revenue visibility you have now?
Yeah. So we should be doing at least 25% overall revenue growth, even without IT being very strong in terms of both on headcount growth and revenue growth. But general staffing will drive the top line growth for us. And in terms of overall headcount growth as well, we are expecting close to 20%, mainly contributed by our staffing business. In terms of margin, as I said, it's very difficult to comment on margin expansion without the pickup in IT. So we are focusing on profit expansion. So sequentially, we are expecting at least a 5 to 10% growth quarter on quarter.
Okay, so you're just coming back to one number, right? I don't know if you can give me that number, but this PAPM, which is the per associate per month, kind of like your realizations, in Q1 it was 680, and you said that in the conference call that you're growing some of your large customers, but I didn't understand what the impact on that on your average realizations would be. From this 680 rupees number, do you think you can extend it for the rest of the year?
Yeah. Yes. So the PAPM with large clients, our negotiation power is relatively weak. With more growth coming from large customers, there'll continue be a pressure on PAPM. So that's why we are focusing on a well-diversified portfolio of large, medium, small customers and across all sectors and industries. In addition to that, we are also upselling value-added services to our customers, which will give us additional higher realization on our overall PAPM. So with that, we are expecting that this year, we should get back to at least a 700 PAPM by end of the year.
All right, Ramani, got that. Thank you very much. Good chatting with you today and good to get perspective. So IT is basically where the trouble seems to be. Let's see if that improves over the course of the year. The market's absolutely flat, just about 10 points up on the Nifty. Mid-cap's doing slightly better. Let's talk about one paint stock that's done quite well so far this year also over the last 24 months. And I'm referring to Akzo Nobel. Stocks up about 25% in the current calendar year. And the company did quite well in the first quarter as well. The performance was healthy as the company saw a big jump in margins, 400 basis points jump in gross margins. Profit was up about 43%. So raw material inflation cooling off has been a big tailwind for a lot of paint companies, including Akzo Nobel. The question is, what next? And how is demand looking as we get into the peak of the festive season? Rajiv Rajagopal, Managing Director at Akzo Nobel, is joining in. Rajiv, thank you very much for being with us. You know, I want to start by taking the discussion to actually decorative, because though I know industrial is a huge part of your portfolio, but let's start with decorative, because I think the discussion on raw material we can keep aside for the time being with crude behaving itself. The question is what's happening with revenue growth, market share, and with so many new players and big, large, deep-pocketed players entering the market. The question is there going to be a big battle for market share, maybe competitive intensity, pricing competition? What do you see in the market today, and what do you forecast for the next 6 months to 1 year?
Morning to you, to Prashant, Sonia, and all the CNBC-TV18 viewers. Thanks for having me on your show. So firstly, with regard to the last quarter, we saw a bit of a growth which was slightly different from what we've seen in the earlier quarters. We saw higher growths coming in from our tier 2, tier 3, tier 4 towns, in fact, high double digit. And in fact, we saw a bit of a muted growth in where we typically have been very strong, which is the large towns and tier 1 towns, right? That's slightly changing. And I'm talking about decorative paints, and we grew, in my view, we held market share. We were sort of, if you look at the last fiscal, we actually added significant market share, and we've been adding market share in the last couple of years after many years, if you really plot the trend of Akzo Nobel stroke ICI. Yeah, so that's healthy, and our intent is to sort of move it there. Coming to your specific question and how the demand is, look, July was a bit tough. Impacted mainly by the monsoons, excess monsoons, but we do see a slow recovery. I think the recovery will be sharper in the 2 months before the festive typically, because this time Diwali is, in the second week of November. So we expect strong September, October. That said, I think we've just got to be a little careful because there are certain nuances in specific markets that we are sort of addressing as a team. But we've got our aggressive plans in place, our advertising is in place, our propositions and new launches are in place. Just to give you an example, we've launched now Dulux Assurance, what we call 2.0, where we've introduced a warranty program. So if any of you are planning to paint your home, you're also covered by a warranty, a specific warranty, and we've sort of launched that. And perhaps it's an endeavor, it's a promise of our quality, which we are very confident about. That's what really Dulux really stands for.
Sure.
Going forward from a fiscal perspective, look, we are still targeting double-digit growth. Yeah, I know the start has been a little slow. Maybe this quarter will also not be really, double-digit, but I do see that, I think our plans are in place, etc. Coming to your question on new players.
So, Rajiv, just before you answer the new player bit, you mentioned you've been gaining market share. Can you give us a number? You mentioned last time that you were at 5.5% to 6%. I just want to understand what's the latest number.
See, we had dropped over 4.7 about 2 years ago, and we moved to almost about 5.5, 5.7 right now, trending towards 6, I would say. Remember that we are not a very big player in the putty, and in the decorative part, we look at with putty, without putty, and also some of the, we are playing in the addressable segments of the decorative. Sure. For example, we don't participate in lighting, furniture, and etc., etc. So when you look at the addressable market, we would be sort of gaining significantly in the last quarter. And except, of course, as I said, last quarter, we would be, I would say, flattish. When you look at it, we've held share, we've not lost it. And we've sort of put some plans through distribution, accessing smaller towns, getting new customers into the portfolio, etc., as ways to drive market share.
Sure. Rajiv, good morning. This is Sonia here. So, it's very interesting you say that July was under pressure because of the monsoon situation. You're not alone in that regard. Every other paint company that we've spoken to has said that consumption has been lackluster. But now in August, there has been relatively not much monsoon. So how was the performance in August? Have you continued to see low single-digit growth? And given the kind of competition as well, combined with a slowdown in consumption, do you think you would have to sacrifice on your margins over, the next couple of quarters?
So Sonia, look, we don't give a monthly sort of guidance in terms of it, but how's August going? Yeah, it's better than July, but not still where we would like it to be. But having said that, as I told you, we are certain that by September things will sort of bounce back in majority of the states where we seem to be getting a better traction. But still, I would say not in line with what we want. From a quarter perspective, we're still hopeful. In terms of getting towards the number. But again, as I said, I see sharper recovery in the next quarter. Primarily because that's just before the Diwali season, and we see huge. If you look at some of the sort of demand that's sort of coming across, not just in the retail side of the business, but also on the project side, seems to be fairly strong.
Sure. No, on the margin front, I was checking with you, and the reason I ask is because I understand that your ad spends as a percentage of sales is going to go up. So in that context, where ad spends are going up, competitive pressure is rising, and consumption is not that great, how much would you have to, sacrifice on margins?
So look, we've been at an EBIT margin of closer to about 13-14%. This is including the royalty we pay, and that's obviously we would be number 2 actually when you look at EBIT margins. Yeah, I think we are fine to sort of look at holding margins at this point of time. And so what's going to come accretive because of further raw material drops, we want to sort of make sure we are investing behind the business. Now, we need to wait and watch in terms of the some of the new players in terms of pricing. It's still early days, Sonia. A couple of players who've launched, say, 2-3 years ago, other than one player, I don't see too much of traction really. So really too early for us to comment in terms of really matching it. Yes, the discounts on the retail, on the decorative side of the business have slightly shot up. That's primarily because of the price increases we had taken earlier, and we've not sort of followed it with price drops because the crude is still very volatile, Sonia, and you are covering it well, right? It is one day it's 82 and the other day it sort of gets close to 90, and so is currency. So it's difficult for us to take a price correction, but we do hope to hold margins. That's been the endeavor that we are in.
Okay. Rajiv, sorry, the other point about distribution, right? You said you were into smaller towns and sort of getting new customers. You said you plan to expand distribution to between 30 to 35,000 dealers. By when and what kind of expenditure will you incur on this?
So, Prashant, we are going to sort of, good morning. We are going to look at a 3-year time frame, right? So, if you look at, we've now started covering almost 5,200 towns. We are now planning to take it over the next 3 years to 8,000. We are pretty much trending on it. Right. In terms of expenditure, not much, because we've already got a distributor model, as you know, in place over the last 6 years, and almost 70% of our turnover of the decorative business goes through. It's a very steady model. We are doing well, perhaps one of the only players in the business which is driving it. And what we are doing is what we call hub and spoke, where we are building on our distributor model to access smaller towns, right? So the break-even is less than 6 months. So really, from an incremental cost perspective, it's not really going to be a significant cost addition, Prashant, if I've answered your question.
Okay, you have, I had more, but another time. We're kind of running out a little time. Thank you very much. And I'm sure that warranty guarantee, there are different rates for customers with kids and without kids, right? So higher rates for customers.
Look,
just joking.
No, but on a serious note, I think it's a fantastic product. I encourage all of you to buy at home. People who've used it, swear by the product. That's the biggest difference. I think our Solus users, if you look at, we 98% of Solus users use us back in 3 to 4 years, right? So, that's volumes of the brand.
Done. We'll check it out, Rajiv. Thank you so much for joining us. It's a pleasure as always, and good luck. A good conversation as always. So
I actually need a paint job, at home. I was just
now
thinking about it.
So
but with young kids at home, it's I think maybe once in 10 years.
Two new customers right there, Rajiv. Thank you very much for joining us.
Thank you.
We'll take a very quick. Thank you. Thanks very much. We'll take a quick break here. We'll come back. Markets absolutely flat. I think 10 points. I think Mitesh is with us, so let's just quickly go across to him for a check on things. Mitesh, hi, morning. What do you have?
Prashant, the index, as I said, I think not much happening over there, and therefore you trade stock on a stock-specific basis. I think I have a buy on Godrej Properties. That's showing good traction early in the trade. Buy here with a stop at about 1600 for targets of 1680. And HUL, disclaimer, we have had a recommendation on this to our clients as well, so there's some vested interest. HUL is a sell with a stop at 2566 for targets of 25.
All right. Those are sort of new trades coming through. Mitesh, thanks very much. We'll take a break here. We'll be right back.
Okay, folks, well, let's just take one quick look. There's really nothing happening in the market. It's so very flat. In fact, it's a good time to be looking outside the equity markets and into the commodity space. Manisha Gupta is with us. Manisha, good morning. What's the one commodity that you're tracking today?
Sonia, it has to be rice. I know we are talking about it a lot, but this really needs to be put in focus because India exports 40% of global trade of rice when it comes to that. And with all the restrictions that are coming in, we are now trading at around 12-year highs in the global markets for rice prices there. India has, as of now, restricted almost all non-basmati varieties. We have export duties coming in, or some of the varieties totally are banned here as well. So as I said, India does, non-basmati accounts for 80% of total rice shipments that happen in from India. And India accounts for 40% of all global trade that happens in sense of rice. So when you look at from the Indian markets itself, we have seen a lot of restrictions come in last couple of months itself. I'll quickly put it down for you here. One is the ban on the non-basmati white rice exports. This was the first reaction or the first instance that the government did really take in sense of controlling availability and ensuring that there is not too much price rise in the Indian markets there. And then came in the ban on broken rice exports as well. The latest has been that you have 20% duty in sense of export of parboiled rice, and now there is a restriction on basmati rice as well. This is temporary, as the government notification itself suggests. So a price lower than $1,200 a ton has been halted. You know, that has come in because the government thinks that a lot of non-basmati rice also was going as a basmati rice in sense of exports there. And when you look at the shipment cost, the average was anywhere between $359 on the lower side to an average of $1,214 on the higher side. So as of now, $1,200 a ton has been put on, and anything less than that is something that will have to go to a committee by EPEDA, and then only those exports can happen. Also, when you look at the Indian market's overall numbers, India ships nearly 4 million tons of basmati rice, and we majorly exports to Middle East countries like Iran, Iraq, Saudi Arabia, Yemen, UAE, and US markets as well. And the markets are anticipating shortage in all of these countries there. Also, take a look at what's happening in the international markets. These are the numbers that we send as export in sense of numbers. So basmati at $4.8 billion, we export something like 45.6. This is the number from last year. When you look at non-basmati, the number is really huge, and that is something that India has totally stopped on. So $6.3 billion of work is what we did in the last year at 177 lakh tons. The expectation from the international markets is that with these bans coming in, nearly 10 million tons of export from India could really be getting impacted. And it's not just India. Myanmar, which is the 5th largest rice exporter, also is looking to restrict exports. So many countries really going into that protectionism. Also, Thailand has advised farmers not to cultivate rice so that they can conserve their water resources. So there are concerns when it comes to rice, which is a staple diet for many countries globally as well. Also, when you look at the prices itself, the FOA has said that as compared to last year, we are up by nearly 16% in sense of rice prices. The only plus point really is that the sowing in India is 4% higher than previous year. But with the kind of weather that we've seen in August and expectations of September, the final number is something that you'll need to watch out.
Okay, got that. Major global shortage seems to be in the making. Rice is quite a hot issue. Thank you, Manisha. For that, we'll take a break on that note. On the other side, our special segment, Indianomics. Latha today gets chatting with external MPC members Shashikant Bhinde, Jayant R. Verma and Ashma Goyal to get a sense of RBI's MPC minutes and the macro environment.